Welcome back to Everything Money. As always, it's Seth and Paul. No Mo today. He's out gallivanting around the country doing Mo things. But today we're talking about the semiconductor business, Paul. These are huge with PCs, with computers, with servers, with cars, these chips. We're going to look at Intel, AMD, and Micron. We're going to look at all three using our 8 pillars. We're going to get a little bit into the stock analyzer tool to show you what you should be paying for some of these. And let's get after it, Paul. You have some interest in these companies.
I have an interest in Intel. I'm going to show my bias here. I actually think Intel is a good value play, and I'm going to show it. We're going to skip to the 8 pillars tab here that is provided from our software, which you'll find more about in a little bit. Look at all 8 checks with Intel. Now remember, just because it has 8 checks does not mean it's a buy. But I believe in Intel, I believe in the revenue growth, I believe in the profit growth, and I believe in the cash flow growth, and it's just perception is being tarnished, it's hurting the stock price. So it's got a $226 billion market cap with $78 billion in revenue. This matters because I want to compare it to the other 2 companies.
Now, at some point, Paul, we did a video on Intel. I bought at $43.50, and I'm up, wow, look at that, 30% since we bought.
Wow, really?
Yeah, that's crazy.
What's it at right now? 56 bucks?
Yeah, 56 bucks.
That's pretty good.
Keep going.
I was buying it in the mid 40s and I'm still going to be buying it sub 50. So with our software, from popular demand, we have created a stock analyzer tool. This is not available yet in our software. It'll be available in the next month, but we have it in beta mode and I will pull it up right now. All right, so this is the stock analyzer tool. What it does is it asks for your assumptions. It's going to give you its 1, 5, and 10-year annualized changes. Ask for your low, middle, and high assumptions. And the reason for that is it wants to sit there and understand, it wants to give you numbers in a range. It's a really good way to figure out if a company, if you put a lot of ranges in there, a lot of assumptions, and it gives you a big range, and the company falls outside of that range, either low or high, it'll tell you a lot about where does the stock fall, okay? So, revenue growth has actually slowed, not surprising. But I think a company like Intel will probably grow with the world economy. So I'm gonna sit there and put a low growth of 2, a middle growth of 3, and a high growth of 4%. Look at their shares. They are buying back shares like crazy, and they're increasing as time goes on. This is a great thing for underpriced companies. It's giving you more ownership of the company than before. So you own your X shares. Let's say you own 10 shares. As they decrease the total shares out there, you still own your 10 shares. You own a bigger piece of the company. So low side, now when the shares are decreasing, you want your low side to be minus 2%, minus 3%, minus 4%. Profit margin. Pretty stable profit margin, 22, 23, 24%. Free cash flow as a percentage of revenue, I'm going to call it 19, 20, 21%. Now PE. Guys, I believe this is 15 all day. I'm just going to fill in 15 for all of these things. Now, desired annual return. What return do you want to have for the stock? Okay? On the low side, now remember, if you want the stock price on a conservative basis, you want a high return, right? Because the more you pay for the stock, the less your return. So here it's a little counterintuitive, and we'll have a video explain this to the right on how you use this thing, but it'll explain to you how you put these inputs in here. I want 15, 12, and 10% return. I hit analyze. It does a little computing. Look at this, guys. This is actually a little incorrect in the sense of this red should be green, and right now, it's selling below 4 of the 6 prices we have here.
Yeah, it's currently 56 bucks.
So, and guess what? 56 bucks, even the lowest end of 45, the lowest end I can come up with, it's still selling within 20% of that. Guys, this is why I like Intel. I do think Intel is worth between these 2 numbers. That's my personal opinion. I believe if you look at their free cash flow, it's increasing. I like that a lot. If you look at their as we saw here in the cash flow increase. Their cash flow has increased $7.8 billion in the last 5 years. So this dying company has increasing free cash flow. How do you figure? All right, let's go to the next company.
Are you writing options on Intel?
I am writing options. I'm selling a lot of puts on Intel at prices of 52 and 50 and below.
Okay.
So when we sell a put, I'm selling somebody the right to force me to buy the stock at those prices. The stock before the expiration date or on the expiration date is below my strike price. Somebody can force me to buy the shares, but I'm okay with that because I want them at those prices anyhow. All right, next company, AMD. This is the one everybody considers to be the big threat to Intel, right?
Yeah, check it out, Nate. AMD's Advanced Micro Devices. Here's their website, Paul. Look at all this stuff they sell. I'm not a big computer guy, but this is some radical stuff. Look at these chips and everything. This is bonkers. Keep going. Let's
now,
get after
AMD was really big back in the mid-2000s. They're going to take over Intel. Then they collapsed. Now they're back. So guys, remember, Intel had $78 billion in revenue and a $220 billion market cap. Intel has 7 times more revenue and than AMD, but only twice as big a market cap. Go figure that. Profit margin, pretty close to it, 25%. PE of 36. So as you see over here, guys, they're increasing their shares outstanding. Look at that, 53% increase in their shares outstanding. Now, did they make acquisitions? I don't know, because a lot of times when you see a big jump in shares outstanding, that could be the reason. But their price to free cash flow is 300 times the last 5 years' price to free cash flow. I mean, this is insane. So,
actually, in April, the AMD and Xilinx stockholders overwhelmingly approved AMD's acquisition of Xilinx, Silicon Valley company. Ticker symbol is XLNX. Announced that they would approve. Yeah, so I guess they do have a big buyout here.
Okay. So let's go look at their stock analyzer. Revenue growth between 6 and 58% in the last year. But remember, the last year had the big shortage in chips, so there's been a lot of demand, higher prices. Share change, increasing shares like crazy. So let's put in revenue growth here of, let's call it 10% low side, 15% middle, 20% high. Share change. Guys, they're issuing shares like crazy. 6, 4, 2. Profit margin. I'm going to keep it at 20, 22, 24. Free cash flow as a percentage of revenue, 15, 16, 17. PE, guys, I'm still, even with a growing company like this, I'm going to say, let's see here. 16, 18, and 20. Price to free cash flow, 16, 18, and 20. Desired annual return, 15, 12, and 10. The company is currently selling for $85 a share. And only one situation out of 6 has the price higher than its current situation. Only one of the 6. And if you're always buying, it's the most aggressive of all the assumptions. So the question you have to ask yourself is, are you willing to buy AMD at $85 a share when of all these situations here, there's only one outcome which proves to be the desired outcome, and it's the most expensive one.
This would make sense. Intel's PE is 12. AMD's is 36.
So the people would argue, well, AMD has more growth, which they're right. If AMD has more growth potential, they should sell at a higher multiple. But how much higher? How much is that growth worth? In this situation, I think your growth is grossly exaggerated here, right? I just think you don't have enough upside to support it. You just don't have enough upside.
We move on to Micron.
Let's move on to Micron.
Check this out, Nate. This is Micron's website. Look at this. Micron's where innovation thrives. They got auto. Look at all this stuff. This is really confusing computer stuff. But they say that the future starts here, Paul. Let's see what they got.
Where innovation thrives, more like where innovation dies.
Oh, okay. Should I hit the?
All right.
Keep going.
Same thing as AMD. X here, X here, X here. Not as bad on the shares outstanding. Revenue, $23 billion. 1/3, a little less than 1/3 the size of Intel, and their market cap is like 60% lower than Intel's. Profit margin, a little bit lower than AMD and Intel. PE of 29, that's an X, no dividend. Pretty lousy return on assets, but a pretty decent return on invested capital. So Micron is probably the lesser known out of all of them. Would you not agree with that, guys?
Yeah,
Seth?
for sure.
Yeah, so Intel is the market leader. AMD is considered the threat to everything. So let's put it in a stock analyzer tool and see where it comes out at.
All the software Paul's using behind him is a part of our Patreon. If you join the Patreon, you get access to the Everything Money software. You get the 8 pillars. The stock analyzer is coming this summer. You get a retirement calculator. New tools are coming out as we progress. We're dumping a ton of money, time, and effort into the software for our patrons. And if you want to join us, join the 3,600 patrons who are speaking in the Discord and talking about their investments. They're getting on teams and investing. And it's incredible, incredible value compared to other people's crappy Patreon pages. I'm saying it. I love you. Paul, what are you doing over there, baby?
So one thing interesting, their profit margin in the last year was lower than normal. So they usually have the profit margin equivalent to Intel and AMD, which I like a lot. And again, I'm going to put in conservative assumptions on the low end, PE, price of free cash flow. They have a negative price of free cash flow last year. But I think 15, 17, and 19 is a reasonable desired return, 15, 12, and 10. The stock is currently $82, and there's only 2 situations that show a higher price that it's worth it to buy that. And again, it's the highest situations. Of course, it's going to be that way. Now, there are a couple situations here where, the vast majority of the situations are significantly lower. Look at these prices.
Yeah.
So we're 24, 40, 62, and 61. So I believe, even based on these growth assumptions, I put 9, 11, and 13. Yes, they had big jumps. They had higher than that in all these years. But the question becomes, if AMD is going to grow a lot, how can Micron grow a lot as well? I don't know. Let's change these to 10, 12, and 14. Still doesn't change it that much. You still see you still see this. Now, you still have major upside potential if all of these assumptions work out the best over here. If all of these work out, you're buying great. But the question is, guys, for those of you in the world of investing, when have you seen 7 years out all the best situations possibly occur?
Yeah.
It's very tough. And that's the point of investing, guys. Investing isn't about what's possible, it's about what's probable. It's like going to the blackjack table and you're a card counter at the blackjack table, right? You know how many 10s are left in the chute. You sat there and said there's an overwhelming number of 10s. Does that mean you're always going to be right? No. But over lots and lots of hands, you're going to be right a lot of times. You're going to be right enough to make up for the losses. Same thing with investing. A phenomenal investor will be right 40 or 50% of the time. A phenomenal investor, right? That's the point of it, is even being somewhat right, you're going to do great. That's the point of being a value investor as well. Here, if you're buying based on all the rosy assumptions, I think you're just going to have problems. You're going to have a real hard time making good money in the long run, because history has shown, go back 10, 20, 30 years from now, the best companies, the most valuable companies in the world back then, that everybody thought were unstoppable, are not close to even the most valuable companies today. That's just a reality. And if you believe in this rose-colored world of everything is going to work out great forever, unfortunately, you might sit there and say, I'm a pessimist. I'm not a pessimist. I'm just trying to sit there and say, with my money, I want to make bets on situations I think the odds are heavily in my favor. This is not heavily in my favor. Right now, I think Intel is in my favor, and that's why I'm buying Intel as a value investor. I think if you buy Intel today, it's a reasonable price, but I want to buy it at a bigger discount.
That's our take on these semiconductor companies. Join the Patreon. You can get access to all this. Paul, we announced a Tesla winner. We're going to have a special about giving them the car. And we're giving another one away at 100,000 subscribers. So if you want to join the Patreon, our patrons are automatically entered to win the car. So enjoy the software. You'll be driving a Tesla, perhaps, Paul. You know that. And that's our take. Intel, I still love it, Paul. I still love it.
That's great.
Yeah. See you later, guys.